So, as always, we talk about what we'll look to cover today, and what's on our agenda. As always, we have a little chat about the Monday market matters in terms of the news that we're dealing with. But in line with our education piece today, we'll talk about how do new traders identify a trend continuation pattern, and most importantly, how can we actually trade them? And how can we do it simply and consistently? And that becomes the really important element in terms of being able to find patterns that allow us to just engage with those markets in a repeated fashion. And then, as always, what we'll do is we will check on the live markets, and what we'll do is we'll invariably have a little look at how those American markets are opening in about 20 odd minutes, and see how we start this particular week. Welcome to Monday Market Matters, and Monday Market Matters is ActivTrades weekly session here to basically help traders start the week in the right frame as we prepare for the opening of the US markets in about 25 minutes or so. So each Monday at 2 o'clock London time, we look to cover what's the major news that we are particularly dealing with, education piece, which is about continuation patterns today. We'll always have a chat about the ActivTrades platforms and tools that you have access to. And then we will look at the other live markets at the start of the US session, which is always fascinating to see how the markets are setting up after what has been an eventful weekend and what is likely to be a very eventful week ahead of us, but more of that in a particular moment. So, as always, we look to start with just a quick look at the news. Those of you who join us every week, you'll hear me say that, if you are new to trading, I don't expect you to be able to effectively analyze the news, but what is important is that I do expect you to know when that news is coming out, okay? Because that kind of news will come out, it might induce volatility into the market. And as traders, volatility is it's a double-edged sword, okay? When you're on the right side of it, it's fabulous. When you're on the wrong side of it, it can make trading challenging. So it's important to know when that news is coming out. That news can always be found out on the economic calendar. There is an economic calendar on the ActivTrades website. I've just taken a screenshot of it there for this week, but there are also others elsewhere. So there's no excuse not to know when the big major news is coming out. And this week has been it's a rather eventful week. It's an interesting week. Last week we had not only the end of the month, but it's the end of the quarter, it's the end of the first half of the year. And we also had the French elections, okay, which we'll touch on in a moment. And then we're going into a week where we have quite considerable amount of major data coming out. So, as you can see there, we have quite a bit of PMI data coming out, okay, throughout the week. But we also have on top of that, we have basically today is a bank holiday in Canada. Then tomorrow, as you can probably see, what we have is we have basically we have, as I said, some CPI data. We've also got Mr. Powell speaking. We've also got the JOLTS job openings, okay, which will be of relevance and interest. Then on Wednesday, we have quite a bit of US data specifically, okay, so we've got the the national unemployment claims, services PMI, and most importantly in the evening, we'll have the FOMC meeting minutes, and lots of traders will be very intrigued to see what actually comes out from that and how that what particular messages they can take from that. Then on Thursday is the bank holiday in the US. Of course, it's their Independence Day. But here, close to home for myself, certainly, is that we have the UK elections. All right, so we had the French elections at the weekend, and we actually had a little bump on the euro this morning because markets interpreted the fact that whilst Le Pen's party had the majority vote, it wasn't as big as everyone expected, and it wasn't enough for an outright majority. So we had a little bit of a relief rally. Here in the UK, as I said, we have the elections on Thursday. We normally get the result for that sort of over the night, Thursday into Friday morning. I think most people in the UK would suggest that the Conservatives are very likely to lose power, and it's more likely that Labour will come into power, and people will be interested to really see what will be the size of their majority, and they'll also be interested to see how the other parties, in particular Reform, how they actually do. So what we'll see is probably, Thursday might be very quiet trading GBP, but as you go into the night, into the next day, that's when we might see volatility, and you might want to just make sure you're aware of that. And then on Friday, the Americans come back from their Independence Day bank holiday. And as you can see, we have both Canadian, but more importantly, sort of American non-farm payrolls jobs this Friday. So it's kind of a busy week. There's a lot of data coming out. That means there's going to be a lot of volatility coming in, and not only economic data, but we have political data, we have geopolitical events going on as well. So, as I said, it's important to know when that data is coming out, because that can actually help you as a trader to navigate yourself through the volatility events. So, plenty to be going on with there. So let's talk about our education element. Let's have a discussion about what we want to look at, which is all about trading trend continuations. And this is kind of one of two pieces. This is the kind of, let's say this is the kind of the introduction piece. This is the introduction piece for new traders, but we'll do another one over the summer where I'll go into sort of more advanced elements of trend continuation patterns as well. But as the slide says, very often, new traders can become confused, a little bit overwhelmed by the bewildering options that are available to them when it comes to trading. And so they're often sort of, questioning themselves about whether they should trade trends or whether they should trade reversals. And the simple question is, which is best? Which one of those is best? And, if so, how do we do it as a new trader at the beginning of your journey? Well, what we'll talk about today is we'll discuss ways that traders can identify trends and then trade the continuation of those trends. And that's what starts to become important for us. Very often, completely new traders like to try and trade reversals. But the challenge is that they don't really have the skill set, and the experience to be able to do it with any consistent success. Very often they're trading reversals coming from a place of ego, namely they missed the trend, and so now their ego is trying to tell them that it knows when that trend will end, and that actually you want to try and trade the reversal of that. And so lots of new traders try and trade reversals, but as I said, they don't really have the skill set or the experience to do it. And that's why we talk about, really, to begin with, a good place for traders to start is trends, because once you identify a good trend, it is invariably everybody wants to try and take a piece of that trend. And that's what we'll talk a little bit more about throughout our session today. So as I said, this is going to be the kind of, let's say, the basic introduction. And then in a second session, we will do probably in about 6 weeks' time, then invariably we'll do a deeper session on more advanced topics. But today is about just understanding, kind of trend continuation patterns. For those of you who are very new to trading, what you realize and will work out is that we can use lines of support and resistance. They create various chart patterns that in themselves can be traded. Those patterns are tradable. For the most part, those patterns are sort of put into one of two options, namely either a continuation or a reversal. And we're going to, as I said, we're going to focus on trend continuations today. Not really unsurprisingly, a continuation pattern means that we're expecting the trend to continue in the direction that it came into the pattern. And a reversal pattern is where we are, not unsurprisingly, looking for the price action to reverse itself. So, as I said, quite often very new traders like to trade reversals, but my view would be that most people are not doing it from the right place. They're yet to have the experience and the knowledge to be able to do it with consistent success. And so what we talk about normally is, as you begin, actually just look at being able to identify and trade with trends. And with that, understanding continuation patterns can be one of the ways that can help you engage with markets, engage with trends, and find yourself in a place to sort of actually trade with the flow rather than fighting the market. It would be interesting to know of those people who are here today in the session, how many of you trade continuations and how many of you trade reversals? It would be kind of interesting to know, which ones of you have how you traded like that. You can put your answer in the chat box, just what your personal experience has been. It's always interesting to see and hear how other traders are working. And yeah, it'd be good to hear that, and we'll talk, and I'll share some of my own experience as we go through. So Andrew says he trades both. Fantastic, thank you for that. And Simon says struggle with the reversal, so do prefer continuation. That's great. That's what these sessions are here for, Simon. Okay, to help people just be educated and just improve their trading. Okay, day by day, session by session. I appreciate your honesty there. Okay, that we're always here and happy to help. So you will normally find that there are lots of patterns, price action patterns you'll hear them bandied about by traders, and I appreciate that if you're at the start of your trading journey, it might be a little bit overwhelming. You might sort of learn all of these names and patterns, but actually, what you'll find is that very often it's very similar patterns that are being used constantly. So as I said, we're going to focus on continuations, but you will also hear them talk about reversal patterns, head and shoulders, double top and bottoms, triple top and bottoms, cup and handles, island tops and bottoms, okay, which you generally tend to see more in stock market trades rather than their FX or continuous contracts. But as I said, we're looking particularly to focus on continuation patterns where we expect the trend to continue in the same direction that price came into that pattern. So that is where we have things like bull and bear flags, ascending and descending triangles, and also symmetrical triangles. And that's what we're going to focus on today in part one. Okay, just being able to understand and clarify simple price action continuation patterns that allow us to effectively to join the trend, okay, and to sort of trade with the flow. So for those of you who do trade particular patterns, it'll be interesting to know, do you have a popular one? And is there one that is your favorite pattern? It'd be interesting to know what, if any, experience you have of that. Once again, you can put that in the chat box itself. So here is one of the prevalent one of the most simple ones, and one of the most popular ones, which is a flag pattern as a trend continuation. Not unsurprisingly, we have a bull flag and a bear flag. Remember, a flag is a continuation pattern, so if it's a bullish flag, we're expecting it to continue in a bullish direction. In this case, we can see price has been rising, and then price over a period, and the thing about this could be a weekly chart, this could be a 1 minute chart. It looks like a flag, and then we expect price to continue in the existing direction. And if you look for sort of classical technical analysis, what you would be looking at is that the kind of the length that we had in the flag pole itself is what we would expect to see price continue in that direction. Okay, and that can be a very handy little way of estimating the sort of where the trade may work to should it break out. So Andrew says he likes to trade head and shoulders. I do myself as well, Andrew, but lots of variations on it. And we will, there will be I'll be doing a session on trend reversal patterns as well, okay, in the future, and of course I'll gladly take looks at different ways of trading head and shoulders in that as well. But flag patterns, as I said, a bull flag is that, a bear flag is not unsurprisingly the opposite, where price is in a downtrend. Price then basically pulls back, okay, price rallies, creates a flag pattern before it drops again. And once again, let's clear all these up. Once again, the price action beforehand is known as the flag pole, and as a general rule, that can be used as a guide to sort of confirm how far price is likely to move in your direction, should it contend in as a classical bear flag pattern. So that's the kind of the basics of it. And there's lots of, I've tried to put in a couple of different sort of examples, always just to let people have a little look and understanding, and how that it always looks pretty and perfect on a PowerPoint, but actually when we look at charts themselves, sometimes it's not always as pretty and perfect, and it can be a bit different. This is just actually a simple dollar-yen 5-minute chart, and as I said, the good thing about these price action patterns is they operate across all instruments and all time frames. And so once you practice being able to see them and get the cognitive recognition to be able to identify them, well, then you're able to work with them continuously. So, what we're seeing is, price has been in a downtrend. we actually have a support line, a resistance line there. That is our flag, okay? And so remember what I was saying is that actually what we want to be able to do is to basically take a look at the flagpole, look at the distance of that, and then we would project that forward as our target. Okay, and especially if you're a very new trader, that is the way we would be looking to do that as if you were trading a bear flag or a bull flag, just being able to do that. I want to put in a couple of different examples from different instruments. Okay, so this is Whitbread, which is a UK stock, and this is the weekly chart, and I'm hoping you can see that basically. Here we go. Let me just excuse my drawing, but what we can see is that we had a flagpole, and then basically we also continued that way. Now, admittedly, we actually also had another flag pattern here as part of it. Now, maybe you can see that, okay? Some people might actually even have seen that as a flag pattern as well. Once you start to practice, looking at them, you will see that flag patterns, okay, all have particular, they show up a good deal more than people expect and think. It could be 3 or 4 candles, or it could be 10, 12 candles. Okay, there's not like a set limit of candles that it has to be, but what you will find is that the clearer it becomes, the easier it is to recognize and to trade with it. And what we're looking for is we're looking for a strong breakout of it. Okay, that is what gets us moving in terms of being able to sort of as I said, as a continuation pattern, the price continues in the direction that we enter the trend. That's what we're looking for. That's what we're trying to do. Okay, and it's one of the reasons why I was saying that for new traders, start off trading trends, okay, and keep it simple, and be able to work with and identify what you see, and look at ways and means to be able to join that trend. You don't have to capture all of the trend at all. You can capture just a little piece of it, and that is plenty enough to begin with. Okay. Sometimes I think new traders feel like they have to capture the exact start and the exact end of a trend, and that is not correct. Okay, that would just drive you a little bit. Bonkers if you're trying to do that. You're looking to actually capture a piece of the trend, and however you can do that. Okay, whether it's particular patterns like we're talking about or elsewhere, that's the important thing. Okay, that you have a simple way to be able to join the trend and ride it. Yeah, more kind of at the same time, that kind of flag patterns in Whitbread. Okay, but also this was daily in terms of price. Price did reverse here and was above its averages, and then what we see is the reason I like it is that different flag patterns of different length, of different intensity over different time periods, but really just an opportunity to effectively to join the trend. Okay, the trend had turned bullish. Price was above the 20 period, which is above the 50, which is above the 200, and invariably what we saw is every time price pulled back, most of the time it printed as a flag pattern, and that was an opportunity to join the trend when the existing dominant trend re-exerted itself, and we continued in the trend move, and that's what we're looking for. Okay, that's what just simple ways to be able to join an existing trend. I've put on a couple of big examples just to show that it doesn't really matter what the time frame or what the instrument. This was kind of Facebook or Meta. This was a weekly pattern, okay, that occurred over about a year's time. All right, and that's absolutely fine. That's what can happen. And you can see here, we have the flagpole, then we had the flag pattern itself, okay, bull flag, and then once we broke out, we literally went as long and as far as the flagpole in terms of its projection before we pulled back again. Okay, I wouldn't necessarily look at that as a flag, because I'd see the price action at the end of it was a little bit scruffy. Whereas here, let me just take my let's just take my things off. Here, what we see is that basically the end of this flag pattern, okay, the end of the pullback was basically a nice bullish pin bar off the 20 period moving average. So that gives me that confluence. You hear me say about it every week, always looking for confluence of events. looking for 2, 3, 4 things to come together at one time and place, and that's what we're particularly looking at there. Okay, so yeah, just an example that's on the weekly chart. But as I said, you'll find these turn up on 5-minute charts, 4-hour charts, daily charts, weekly charts, so whatever time frame you particularly like to look at, you will find that flag patterns do appear. So that was flag patterns. Now let's have a little look at ascending and descending triangles. Okay, so ascending triangle. Why? What are we expecting? Well, remember, it's a trend continuation. So an ascending triangle is what we'd expect to see in an uptrend. So if price was working its way up, then what we'd see is expecting it to basically to have an ascending, which means that we're expecting price to continue out of that triangle, expecting price to basically to continue in an uptrend in an ascending triangle. Okay, and what we need to see is a pretty clear, okay, the kind of top level of the triangle to be pretty clear, pretty flat. But actually, what we're expecting is price to break out and continue in an uptrend. That's what we look for. On the flip side, okay, in a bear trend, what we're looking at is a possible descending triangle, and here what we'd be expecting is price, has been moving down, okay, and then invariably it forms that descending triangle. Once again, the bottom floor of the triangle should be flat, and actually what gives it away is that basically each of the highs are lower. We're getting lower highs and basically a flat sort of level, and then what we're expecting is that price will continue into the downtrend, and price will break out and follow its way through and continue. And as I said, you will see these triangles, see these patterns all over charts. Okay, on doesn't matter about the time frame, doesn't matter about the instrument, you will find them there. And so being able to recognize and identify them is a great skill to have as a trader. So, just a simple intraday example on pound against Japanese yen. You might, with a bit of practice, you'll already start to see that with your own eyes. We can see that we're getting resistance. Each of our highs are becoming lower. Okay, lower highs are time after time, and then we have support. Okay, we have our support level there, just sort of being quite clear. And one of the things we look at for is to help us with projecting forward as a possible target. What we'll take a base price target. So your first, here we go. Let me just 1 second. Your first swing here, okay, projecting that to the sort of the top of the triangle. That is what gives us a kind of a range that we can utilize to basically to project the way forward. And as you can see here, okay, as you can see, what we actually did there is that projected forward nicely, and you can see that it actually carried on there, and that's fine. That's fine. What we're looking for is a way and a means to identify, where that possibly might run to, and be able to use that as a target for our trading setup. So that was a descending triangle. Let's have a look here at an ascending triangle opportunity. So what we can see there, I hope you can see there's a resistance level there. And actually, what we have is a really nice support level there, okay? And that's bang. That's our kind of ascending triangle. Okay, remember we need to see our resistance level pretty flat, okay? And then also our support should be basically bang higher lows all the way up. That's what's creating us our nice ascending triangle. And as I said there, to help us project forward, what we want to do is our first swing, our first touch of the resistance level. That's where we project that from, work that out from the range back to the support line, and then use that as a base price target that gives us a level at which to project forward to. Okay, and that helps us identify our target. So there's a couple of points here. I'm just going to go back on. There's a couple of points here that I'd like you to sort of take advantage of or learn from. Is that hopefully you can see down here, price did break out, but actually price, it went sideways for, this is a 30-minute chart. So it went sideways for a couple of hours, before it took off, okay? And sometimes you just have to be prepared for that. Everybody wants to see a lovely big move off one candle, okay? We all like to see that, but the reality is that's not always the case. Sometimes you just have to really have the patience to wait for that trade to play itself out. One other thing that you might be interested to pick up on, and maybe some of you have already seen it, is that once price had started in its nice trend, well, what did it print here? Well, it printed a really quite nice bull flag. So there was opportunities for you to have your initial trade, but this was also an opportunity for you to be able to add to your trade as well. Okay, an opportunity to build a position just using continuation. Okay, just using trend patterns, continuation patterns as a way and a means to access that market and trade with it. Okay, so I'm hoping that you can see that once I'd drawn that in. That was ascending and descending triangles. Now, let's have a look at symmetrical triangles. And as the name implies, whereas the ascending triangle or the descending triangle, very clear which is which. Here in a symmetrical triangle, okay, we are expecting price to be quite even, to be symmetrical, okay, in the way that it starts to coil up, and the way it basically looks to break out of that, and hopefully you can see that there on its own particular pattern. If we look on the charts, okay, to identify it, euro, yen, and 5-minute charts. Once again, we're always looking to identify, right, where is the resistance, where is the support, and hopefully you can see that is showing up as a symmetrical triangle. And the same as for the other triangles. Once we're identifying, okay, looking for the first swing, okay, up to the other side, and that starts to get used as the base price target, okay? So that base price target is where we can project forward from where we break out as to where a possible target lies for the trade. So hopefully you can see that bang, after prices broke out, you can project that forward, and what do we know? Price actually works its way down to there, okay, over the next couple of hours on this. What you might also see is that actually, there you go. There is also a little bit of a bear flag. Okay, price is in a trend; it's breaking out, printing a bear flag, and there you go. So, as I said, lots of those patterns start to show up once you're doing your practice every day and just embedding those cognitive recognition skills, be able to see flag patterns wherever they may appear, and be able to identify, how and the best way to trade them. Another example here, just a bit of a shallower symmetrical triangle. Here we go. Hopefully there you can see it, okay, how that just builds up. And this has been kind of one of the elements for myself in my own trading. So I was personally, and this is a personal thing, I was never really the best at trading symmetrical triangles, or rather, I wasn't compared to, I used to work with a female trader who I would quite happily state was probably the best symmetrical triangle trader I'd ever met. Okay, that was her absolutely best way of trading, her best way of absolutely doing stuff, and that was just absolute. She was absolutely brilliant at it. I was okay, but nowhere near as good as her. She was really good at it, and so there's a couple of stories from that. One of them is that you have to find what suits you best. So you have to learn lots. You get lots of educational webinars here at ActivTrades that you can learn about aspects of markets, aspects of trading, and then as you hear me saying all the time, when make sure that you keep good records of your trades and you start to debrief your trades, it starts to resonate which are which are the setups that actually, leap off the chart at you, which are the ones that work best for you. They can all work differently, and that's absolutely fine. Okay, it's it's not always important how I trade. It's important how you can trade best and how you can trade most consistently. And so, as I said, my kind of female trader friend who I worked with and stuff, she just basically traded triangles. That's literally all she traded, and she was really good at it. And she was, and strange enough, the more she did it, the better she became at it, because she just practiced at her craft, etc. And it was, was very good at that. Whereas I find that I tend to use these triangles as an indication that a big move is happening, because I look at it like how the sort of the price is starting to coil up, and you'll quite often hear me talk about that and say how I see prices like coiled up, like a coiled spring. It's getting ready, all right, to make a move. And sometimes that's very, very clear which way the move's going to go. Other times it's not, and that's something you just need to understand and work with and improve at your ability to be able to analyze the triangles and identify where which is the higher probability move off the back of it. So yeah, as I said, the first swing, take that, an extension of that to the other side of the triangle, okay, other side of the, in this case, resistance, and then that becomes the level from which you can project forward your target, okay. And you might well find that the price goes much further than your target. That might happen on occasion, but really ultimately your job is just to trade, plan your trade and trade your plan. That's what we're particularly interested in waiting to see. So Simon says he sees triangles on the pound against Swiss. Okay, so what we'll do is when we switch across the live charts, let's have a little look. We'll have a little look at pound Swiss and see what you see there, okay, and work with that, okay, to see, see if we can help you. So, you might, if you don't have access to, you might want to take a print screen, okay, of this page, okay, this slide, continuation patterns, and it says that it's covering an awful lot of the ones we've just talked about today. So, as I said, ascending triangle, okay, which is a kind of a bullish move. Descending triangle is a bearish move. Then you have a symmetrical triangle with an uptrend bias and a symmetrical triangle with a downtrend bias. And then you also have pennants, okay? Pennants are just a kind of smaller, tighter versions of symmetrical triangles. They tend to be smaller in their range, but it's the same kind of idea that you can actually do it. So Simon says on the 30-minute chart. Well, we'll go and have a look in a moment, see if we can see that there, see if you can work it. But I know traders who just basically focus on trading flags. As I said, my kind of female trader friend, she used to just trade triangles, as I said, it's about recognizing and understanding which ones are the most useful to you, which ones resonate with you, which ones do you actually, can see and can actually see them leaping off a chart at you and work with that. That becomes all the sort of, very important elements that we want to understand. So before we switch across to the live charts, see how the markets have opened. Just in conclusion, remember that Money Market Matters is here to support you, okay, in your trading endeavors in 2024. Every Monday, 2:00 London time, we'll do some news, we'll do some education, like what we've just done on triangles there, okay, trend continuation patterns, and we'll also talk about active trades and markets. I have said all along that this is going to be an interesting year in markets, and I think this is going to be an interesting week in an interesting year. And so, as I said, I hope that you'll join us to enjoy the journey and be able to help each other through that. As I said, it's easy for new traders to be overwhelmed by the kind of limitless opportunities and ways to trade. And generally, okay, we suggest to traders that you start up by learning, understanding, and identifying and trading trends. They tend to be, the good, better starting place for most traders. And with that, with the experience, what you start to realize is that you can use particular levels of support and resistance to help identify particular chart patterns. Those chart patterns are either continuation patterns, like what we've just had a little look at there, or they are reversal patterns. And we can use the patterns like flags and triangles to help us trade continuations of trends. Okay, and so that's that's how we can utilize those chart continuation patterns to just help us, take a piece in a nice trend. As I said, you don't have to capture the exact start. You don't have to capture the exact end. The likelihood is you won't. All right. Most traders don't. And that's fine. All right. That doesn't mean you're a terrible trader. You're just looking to find a way to get a piece of the continuing trend. And one of the ways to do that is to use trend continuation patterns. Okay. And that's what we've just talked about there. And as I said, once you practice a little bit, being able to see flags and triangles becomes much easier. All right. And, and it helps you make sense of those markets around you. So before we switch to the live charts, just a reminder, as I said, Monday Market Matters is here every Monday, 2:00 London time. Next Monday, our Monday Market Matters session, the focus of it for the education is basically, is trading an art or is trading a science? Okay, so kind of an interesting philosophical point there for traders, but actually one that is useful. It's one that's relevant because it just gives you an ability to help understand yourself, understand markets, understand why you make some of the trading decisions you do, and what sort of things you can do to help yourself in terms of moving yourself forward in your own journey as a trader. So as always, if you've got any questions or comments there, you can get in touch with us there. You can see that email is englishdesk@activtrades.com. If you've got any questions, if you've got any comments or thoughts, send them through and they'll push them on to me. Maybe you've got suggestions of topics that you'd like to see me cover, for the remainder of the year. And we'll happily always listen to that and take that on board. We want these sessions to be, beneficial and valuable for you and help you as many ways we can. So you are, as always, welcome to email englishdesk@activtrades.com if you've got any particular comments and thoughts that you'd like to add. So if you just bear with me for a moment, what we're going to do is we're going to switch across to the charts, and then we'll start to have a little look at how the American markets have been shaping up, and we'll also have a little look and talk about trend continuation pattern. So just bear with me a moment, and we will switch across to the ActivTrades charts. Okay, so here we go. I'm hoping you can still hear my voice, hoping you can see the ActivTrades platform. One of them, we've got TradingView, we've got ActivTrader, we've got MetaTrader 5, MetaTrader 4. Okay, so lots of different platforms that you can utilize to trade with ActivTrades. So let's have a little look at the start of the session here. So let's just do a little bit of work here. Now the Dow, you can see I've got my previous day's highs and previous day's lows, and there are quite some swings there on Friday. Then I'm interested to see, well, actually, okay, where have been highs and lows this week? So far, let me just draw that in. So just draw it in as almost like a level of resistance and see how does price play that. I'm also saying, just want to look at the bang. Just wanted to look at the kind of highs and lows of the actual session, the day so far, because quite often I find that there's some sort of reaction there. If you look at that 50-minute chart, okay, just you start to have a bit of a strong push just in front of the news, and then the kind of down news has taken us pretty much high there, hasn't it? Going to the 5-minute chart, just what's that, 39,523, 39,748. So literally comes out over like sort of 225 pips or 225 points. That's what we've moved since the opening. It's kind of like the last 15 minutes or so, I suppose. You can see how that's playing itself out there. I mean, if I go down to the 1 minute chart, you can see that I'll be watching. Here we go. All right. Okay, let's have a little look at that and how that plays. So Dow is doing that there, okay, and I expect that what will happen is maybe we'll get a bit of mean reversion. I'll just watch that for there. Look at the Nasdaq's doing the exact opposite. We can see that here, that's drawing the high, just drawing the highs, that's the lows, and you can see that basically it's. The price is open as low, and I would expect it to go down to previous day's low, and also the actual previous session's low in terms of that's where the price was. That's where we traded through it. Let's just zoom out a little bit. Is there anything else going on there? I'd say that's that after that is, if we just look at that Friday there price action, having tried to push up, we pushed much further down, and then kind of traded sideways, and yeah, the Nasdaq is Nasdaq's going lower. Let's have a little look at it. So I would be, yeah, I'd be looking for the Nasdaq to come down to the previous day's lows, okay, previous session's low, and now there'd be interest to see how does price react to that once we get down there. That's what I'd be particularly looking for. So we're going to come back to that we'll come back to that in a moment. Just keep an eye on that themselves. S&P 500, not massively dissimilar to the Nasdaq. Just here we go. Okay, let's just have a little look. Yeah, probably just be saying that that's a bit of a broadening formation there. Yeah, I'll just say there we go. There's a little bit of a broadening, just going into the open, and a bit like Nasdaq prices rolled over and start to push its way down there a bit. That 5-minute chart, yeah. Just put to go and break its previous lows, previous swing point, okay, which is just kind of you want to see how the price reacts to that fractal break, and how it works. Does it continue to work lower, or do we find that it's just a point where it'll actually have to make a decision? What time we're coming up to? 14:47. So yeah, as I always say, on a Monday, I generally sort of give the first 15 minutes a miss anyway, because I just find the markets can be a bit too volatile, especially if there's been some events going on over the weekend. And we have had the elections in France, which, might not necessarily have a complete direct relationship with America, but there's certainly, fond relationships and partnerships that work between the two countries. And anything that might threaten that is likely to threaten people's desire to hold money in that kind of country or that account. So let's have a look. I'm just going to put this down to. So yeah, it's just sometimes it's kind of, you can look at it through the prism of of something like a line chart. But yeah, there we go. That's there we go. Okay, so it's interesting. You hear me say this every week, is that I like to trade when they're in confluence there, but at the precise moment that was heading up, Nasdaq's really heading down, as is the S&P, and actually the Russell. So it's kind of interesting, a bit curious that see how that particularly plays out there. As I said, I normally like to see them all sort of working together, but you are more likely any other day, than Monday, to find yourself, the price being a little bit divergent as we look at here. Okay, that's that's what we're watching. But we'll come back to that in a moment. Okay, we'll come back to the moment. We'll give themselves a couple of minutes to work out what they want to do. We've done our own little bit of analysis. We can do that, and then we can come back in a few moments. So let's have a little look at. Simon talked about pound Swiss. Let's have a little look if we can see a triangle on there. Okay, so 30-minute chart here on pound against the Swiss. Just looking at that. Let me just start as always. I like to start. There we go. Oops. So that's the weekly chart there. There's the weekly chart, and for a long time in pound against Swiss, we kind of bounced between about 111 and 115. Okay, we bopped out of it, and then a few weeks ago, and then we came straight back down into it. But I'm always, even if I want to trade the 30-minute chart, I'll just take a little bit of a look and see what's going on. When I look at that there, this is the daily chart. Okay, I'd have been looking at. Excuse my drawing, but I'm hoping you get the gist. Here you go. I'm sort of just drawing a couple of bull flags. This is quite big and scruffy. All right, but certainly, despite my drawing, those couple there. Okay, those couple there, and then what here on the other side. I would look at this as nuts. Bosh. So you can see a bear flag there, and what we can see is the price basically dropped its way out. It's dropped its way out there. That's what we do. Yeah, so that's what I'll be looking at there. Okay, I'm pounding at Swiss in terms of the kind of looking at it for different patterns that are just showing up. That's just me taking a quick look at it. Let's get rid of those, and then let's get down. Let's go down and see what's going on there. Okay, so that kind of daily that daily price action that we saw, we just drawn on there. There it is, on the 4-hour chart. If anything, it might actually look even better on the 4-hour chart in terms of it just being a bear flag. As I said, I like to see flag patterns ended with rejection candles. That's what we've got, and then we just get a really bearish move out of it, and you can see price just drops down for about the next 2-3 days there. I know. I think it was pound Swiss that Simon said he saw a symmetrical triangle on, or a triangle pattern. I'm not entirely convinced of that myself. If there's something I've missed, which can be perfectly possible, then please let me know. Let's have a look at the hourly chart. Okay, an uptrend with 86 with triangles on the 30-minute. Okay, so let's just have a little look at that. It's definitely been in a very good uptrend. Definitely been working its way up there. Okay, and you said 1806. I'm not entirely sure. I'd say that I would see one myself there. What I'd be looking there is just from that kind of period. That's a double top. Okay, then that's what I'll be looking at there. Perhaps here, but that might be a bit much. Just zoom in a bit. So for 18th of June, yeah, I'm not seeing anything there myself. Okay, maybe perhaps I've missed, but I don't think so. In terms of that, as I said, I'd see that as a double top. I'd see there's a few as price coiling up, but I'd be worried to look at that and stuff. I don't, a good flag pattern or a good pattern should leap off the chart at you. Okay, if it's not, well then it probably isn't. Okay, and that's fine. We're here. Everyone's here to learn and stuff and what have you. So I'd have probably been looking at this here on the today. Yeah, there you go. Today was a pretty strong bullish. So there you go. On the 15-minute chart, that's what I've looked at there. I'd have said that was a kind of flag pattern there, and that's I wouldn't. That's what I would have been happy with on that in terms of that look there. Okay, it should look natural. It shouldn't look forced. If it does, that's where you tend to have problems with your sort of trying to trade those patterns when you have particular difficulties and stuff, or whether you just try and. We find often a lot of people they will just basically amend their plan or adapt their plan just to chase what they see happening in the candles on their chart, and that's not really the way to trade effectively. You need to have a nice simple plan that you can just follow day in day out, and that's what will take you further than anything else. Okay, so I'm happy to look at. Excuse me. Yeah, no problem. I'm happy to look at that. I'm happy to look at that for you there, Simon, and stuff. That I appreciate. It's what gives you the chance to get an idea and stuff. I'm just looking. Yeah. So looking at just as well, sterling pound against yen has been very nice. Nice patterns there and stuff. Well, nice trend. Okay, but even that, just trying to look for a nice clear pattern is not always the kind of the not always the kind of the same. It's especially when you're in a really good trend like that. But anyway, let's go back to have a little look at those US indices before we kick off, before we start, and then come back and have a look at those again in a moment. Sterling's just in a trend today. Okay, just on an intraday basis, it's just I think an element of the European response, okay, and also an element of just getting ready in front of the elections. Okay, so remember what I keep saying, that I like to see things that are especially in American indices, they're correlated. Um, Clearly, as we said, Nasdaq, S&P, they are on a very strong down move, aren't they? It looks like it's run out of steam for the Dow. Okay, but the Dow, remember, is on the 1 minute chart. It looks like it's finally rolling over. Looks like Russell might even be doing the same as well. Okay, having just been sideways for a couple of hours. So I would suggest that basically the S&P and the Nasdaq are the one leading at the moment. So that's once I can get an idea of who's leading, well then I'm in a position to allocate my time, energy, and resources a bit more effectively. Okay, that's what I particularly want to sort of see and do. Mohammed says, in which time frame have I found the triangles the best results? That's a good question. Okay, when it comes to triangles, you will find triangles across all time frames and all instruments. So part of that is also to do with what instrument you particularly trade. What I would say is that I've seen really good trade triangle patterns on the very lower time frames, as in like 1 minute, 5 minutes, etc. But equally, you can also see them on the 4 hour and the daily and the weekly. But of course, with the things like the 4 hour and the daily and the weekly, it takes longer for them to set up and to play out. So you just need to be aware of that. And actually, what becomes more of a challenge for traders is actually them having the patience to wait for the play to work its way out. So my friend, who she was the best triangle trader I've ever seen, she used to focus on trading mostly on the daily chart, but then she would also trade triangles across all time frames if if opportunities set up there. So my suggestion would be, Mohammed, is that basically if you are you're better to look for what is the time frame that works best for yourself. Some people can operate on the intraday, some people need the swing, some people need longer term position. It's about actually which time frame suits you better, and then from that, okay, find the sort of the pattern or the way that is the most easy for you to be consistently okay in your execution. All right, that's what I would suggest is you find the time frame. Some people might like to trade intraday, but basically they can't because they're either they're running a business or they've got another job or they're raising families or they might be doing all three, and so intraday trading is tough for them. Okay, other people might just not like the pace and the intensity intraday and are quite happy to sit on 4 hour, 8 hour, 24 hour, daily, weekly kind of pattern. So, it's part of it is about knowing yourself in terms of what kind of trader you are, Mohammed, there and stuff. So I apologize that's not the exact direct question you might, or answer you might like. I'm just trying to give you insight based upon my own experience of working with hundreds and thousands of traders over the years with that. So hope that helps. Bang. So we're just looking into the last minutes and stuff. So it's no surprise that actually, having sliced down there, we're just reversing a little bit. 1 minute chart. Yeah, it's not the most attractive reversal patterns, but I wonder if maybe it might set it up as a pattern. Well, here we go. Just looking here on this 1 minute chart. I would look at this. We were, as soon as we're here, we're beneath the sort of the moving averages. I would look at that. That is a bear flag. Okay, bear flag in a downtrend. That's what I would have looked at that as being. Okay, so you might want to just, if you're there in front of the chart yourself, you might want to just take a link. So Mohammed says most of the time I trade on 1 minute chart. Well, there you go. That was a Nasdaq 1 minute flag pattern there, just basically working its way up. Or working its way down from that rather. And that was kind of a nice little move on that, wasn't it? Nice little move. Right, let's see what else we've got on here just before I finish up. Interestingly, yeah. So we had news. Yeah, news coming up there. Bang. So yeah, so I'd be just waiting for this kind of like a element of news to just work its way through and work its way out. On that, let's just have a little look at 5 minute charts. Just quickly sort of see what's going on. If I go up. So yeah, I thought we'd. So you can see here yesterday's high. I thought we might sort of just push our way up to that, but it doesn't seem to want to do that yet. So I would just be. I'll just watch. Let me just put these on. So interestingly, Nasdaq is rising, SP is rising, Dow's falling. I wonder if they're all just going to come together and converge after a bit of data. That's what I'll be. Yeah, that's what I'll be viewing there. Okay, just keep an eye on that. I thought that might be a flag pattern that builds, but it's not really. It's not going to be a flag pattern. It's just. Um, the price action has gone a little bit quiet, and so it will do after give it a little 5-10 minutes until after the news, and then we can you can relook at it from there. Okay, ladies and gentlemen, as I always say, time flies when you're having fun, and unfortunately, our time together has come to a close. I appreciate we're sort of trying to race through and share with you as much as I possibly can in the hour. That's because we want to be able to help you and support you, just give you a little bit of help and insight. As I said on the news piece today, there's going to be it's going to be an eventful week, lots going on. So just make sure that you're always managing risk, okay? That you're always doing your position sizing, and that you're always keeping your powder dry. You're waiting for the best opportunities, okay? It's all about quality of decisions. All right, that's what we like to see time and time again in good traders. As always, I wish you the very best of success in your own trading, ladies and gentlemen. I hope you have a fabulous trading week, and I hope you'll join us next week for Is Trading an Art or a Science? I look forward to seeing you there. Trade well, everybody. Cheers.